Hello everyone, welcome back to the weekly market updates. I am Khadgawat. So this week, amid high volatility, we have again made a new high on Nifty, that is 22,799. However, we gave up all the gains that we have accumulated over the week and touched the lows of this week, that is 22,350 levels. One more interesting thing happened this week, that volatility index has rose to the 50% levels. From the level of 10, we have come to the level of 15. That surely indicate that markets are a little worried about the results of the upcoming Lok Sabha elections, which is going to come on June 6th. Now, this is $1 million question, that whether the existing government will come with a thumping majority or otherwise, but we'll only get to know about this on the day of 6th of June. Now, let's understand how markets have fared throughout the week by looking at the movement in the major indices. So Nifty has traded in the range of 22,400 and 22,800 levels, whereas mid-cap remained almost flat with a little positive bias. However, small caps have given little negative returns for the week. Now let's take on few global market updates. The month of April has remained net negative for the global equities, where the equities have fallen to 3.9%, and which is majorly sponsored by the US markets. This fall in US markets have come on the backdrop of the interest rates, which are going to be higher for a longer period. In the latest outcome of the Fed meeting, the Fed chief Jerome Powell has conveyed the stance of the committee to keep the interest rate unchanged. And he further conveyed that committee will keep on assessing the incoming data regarding the inflation and accordingly will take the decision on cutting the interest rate in future or not. Now coming back to the other global markets, the Europe and Asia also fell for the month of April, and mostly the Asia fell because of the contribution from the Japan, which contributes more than 35% of the index. Now let's see sector-wise performance. So this week again, PSU banks have come into the first position by gaining more than 5% throughout the week. However, they have lost almost 1.5% today itself. So metals came in the second position with 3.91% of the gain, followed by the pharma sector. Now let's see what has happened in the institutional activities. This week, surprisingly, FIs have turned net buyers. After a long time, they have bought around 273 crore rupees of stocks in the cash market, whereas DIs have continued their buying spree and bought more than 3,400 crore rupees of cash stocks in the market. Also, FIs have turned positive on the derivative position after a long time. Now they are 53% longs in positions in the derivatives. Now let's see what has happened with the commodities. In international and domestic, both the markets commodities have cooled off. Gold and silver both have cooled off and given 4 to 5% of negative returns for the week, whereas the crude oil, the most important commodity for the Indian markets, have also cooled off and came to the level of $83 from the highs of $92 which we have seen in the previous week. Now let's take on few of the important domestic events. Indian government has reduced the windfall tax to the tune of 8,400 rupees per ton. On a very positive news, the GST collection have reached to the highest ever level of 2.1 lakh crore rupees for the month of April, which clearly indicates the strong growth on the domestic front. In another event, BSE has increased their transaction charges across different turnover brackets for the option contracts. Now let's talk about few stocks in news. So in a yet another shock to the already troubled Kotak Bank, its joint MD Mr. KVS Manian has severed his 3-decade-old ties with the bank and resigned from the post with immediate effect. The stock of Kotak Mahindra Bank has fallen more than 15% after the sanctions imposed by the RBI. In another news, Exide has posted stunning results where its profit has grown to 37% Y-on-Y basis. This is it. We'll come up with new market updates next week. Till that time, stay tuned with us. Thank you so much.